Stop. Your Feb 25th pension might be missing. New CRA tax filing rules. Explained. There is something happening right now that a significant number of Canadian seniors are simply not aware of. And if you are receiving CPP, OAS, or GIS, if you are expecting a government pension payment on or around February 25th, you need to hear what I am about to tell you. Because for some Canadians, that payment may be smaller than expected. For others, it may not arrive at all, not because of a system error, not because of a banking issue, but because of a quiet but serious shift in how the Canada Revenue Agency is now applying its tax filing rules to benefit eligibility. This is not a rumor. This is not speculation. This is a policy development that has been building for months, and it is now arriving at the doorstep of Canadian retirees and seniors at exactly the moment when household budgets can least afford a disruption. My name is Joseph, and today I am going to walk you through exactly what is happening, why it is happening, who it affects, what you can do about it, and what the government has not been particularly loud about explaining. Stay with me. This matters. To understand what is happening right now, we need to briefly step back and look at the larger picture. Canada's federal pension and benefit system, which includes the Canada Pension Plan, Old Age Security, and the Guaranteed Income Supplement, is administered through a layered relationship between Service Canada and the Canada Revenue Agency. Service Canada manages the payment side. The CRA manages the income and tax filing side. These two agencies share data, and that data-sharing relationship is at the center of what is changing. For years, the system operated with a degree of flexibility. The CRA would assess a senior's income based on their most recently filed tax return, and Service Canada would use that assessment to calculate benefit levels, particularly for income-tested benefits like GIS, which is the Guaranteed Income Supplement for lower-income seniors. The assumption built into this system was that most seniors file their taxes, and most do, but not all. And here is where the situation has become more serious. Over the past 2 years, the CRA has been quietly tightening its enforcement of what it calls information requirements. Essentially, its authority to suspend or adjust benefit payments when a senior's tax filing status is not current or is flagged as incomplete. What was once handled with reminders and grace periods has, in recent months, shifted toward firmer administrative action. Policy analysts who follow CRA enforcement trends have noted that the agency has been under significant fiscal pressure. Canada's federal deficit, the cost of administering an aging population's benefits, and the government's stated commitment to reducing benefit overpayments have all contributed to a more rigorous approach to compliance. What this means in practice for real Canadians receiving real pension payments is that the margin for error, the room for delay, and the tolerance for missing tax filings has narrowed considerably. And February 25th, which is the scheduled date for the next federal pension and benefit deposit cycle, is arriving right in the middle of this enforcement window. Let me be precise about what is happening so there is no confusion. The CRA has rules that link a senior's benefit eligibility, particularly for GIS, and certain OAS adjustments to their annual income tax filing. This is not new in principle. What is new is the rigor with which these rules are being applied, and the speed at which administrative consequences are now being triggered. Here is how the system works at a basic level. If you are 65 or older and receiving old age security, your base OAS payment is not income tested in the same way that GIS is. However, if your income exceeds the OAS clawback threshold, which for 2026 sits at approximately $90,197, a portion of your OAS can be recovered through what the CRA calls the OAS pension recovery tax. For GIS, the income testing is much more direct. The Guaranteed Income Supplement is designed specifically for low-income seniors, and the amount you receive is calculated based on your reported income from the previous tax year. If the CRA does not have a current, filed tax return on record, it cannot properly calculate your GIS entitlement. Now, here is the critical point. The CRA has indicated through updated administrative guidance that where tax filing information is missing, incomplete, or flagged for review, benefit payments may be placed on hold, adjusted downward, or in some cases, suspended pending resolution. This is not a theoretical risk. It is an administrative process that has already affected some benefit recipients, and the February 25th payment cycle is a date by which many of these holds and adjustments will either be resolved or will not be. Additionally, there is a related development that is affecting a broader group of Canadians, including some who do file their taxes correctly and on time. The CRA has been updating its rules around what it calls income verification requirements for seniors who have recently experienced a significant drop in income, for example, someone who retired in 2024 and whose 2024 income is substantially lower than their 2023 income. There is a mechanism called the current year income option that allows seniors to apply for GIS based on their current year income rather than waiting for the previous year's assessment to cycle through. But that process requires a specific application. It requires documentation. And if a senior has not taken that step or was not aware they needed to, they may be receiving a GIS amount that does not reflect their actual current financial situation. And in some cases, that may mean they are receiving less than they are entitled to. What the CRA is now enforcing more tightly is the documentation and verification component of these processes. Missing a step, submitting an incomplete form, or simply not knowing that an application was required, these are the gaps that are now creating payment disruptions for some Canadians. Let me be direct about who is most at risk from these changes. The first and most immediately affected group is low-income seniors who rely on the Guaranteed Income Supplement. If your GIS payment is even partially disrupted, the financial impact can be severe. GIS is not supplemental for many Canadians, it is essential. For some seniors living alone, GIS can represent $300 to $400 per month or more on top of their base OAS. Losing that, even temporarily, creates immediate hardship. The second group is seniors who have recently retired, particularly those who retired in 2023 or 2024. These individuals are navigating the benefit system for the first time, often without professional guidance, and may not be aware of the current year income application process or the documentation requirements that come with it. The third group is seniors who have had a gap in their tax filing history, perhaps due to illness, a family emergency, or simply a misunderstanding about whether they needed to file. The CRA's position has consistently been that even if you have no income to report, filing a return is essential to maintain benefit eligibility. That message has not always been communicated clearly, and some seniors are now facing the consequences of that gap. The fourth group, which is often overlooked in these conversations, is seniors living in remote or rural communities, seniors whose first language is neither English nor French, and seniors who do not have regular access to professional tax or financial advice. These individuals face structural barriers to navigating a system that is becoming increasingly unforgiving of administrative gaps. And finally, near retirees, those who are 60, 61, 62, approaching the age of pension eligibility. Now is exactly the time when you need to ensure your tax filing history is clean, current, and complete. What happens in your records today will directly affect what you receive in the coming years. Let me put some real numbers to this so the stakes are clear. The maximum monthly OAS payment for Canadians 65 to 74 as of early 2026 is approximately $727. For those 75 and older, it is slightly higher, approximately $800 per month, due to the 10% increase that was introduced for older seniors. The maximum monthly GIS for a single senior in the lowest income bracket is approximately $1,065. Combined with OAS, that brings the total monthly federal support for the lowest income single seniors to roughly $1,990 per month. Now consider what a partial suspension or adjustment of GIS means in that context. If a senior's GIS is reduced by even 30% due to a documentation issue or a filing gap, that is a monthly reduction of approximately $320. Over 3 months, which is roughly the time it can take to resolve a CRA administrative issue, that represents nearly $1,000 in lost income. For a senior living on a fixed income, in a period of elevated housing costs, grocery prices, and utility bills, a $1,000 shortfall is not an abstraction. It is a decision between medication and food. It is a missed rent payment. It is a call to a family member asking for help that the family member may not be able to provide. The CPP, by contrast, is not income tested in the same way it is based on your contribution history. But CPP payments are still subject to tax, and CRA's ability to adjust tax withholding or flag overpayment recovery can affect the net amount a pensioner receives. The February 25th payment date is significant because it falls early enough in the calendar year that any disruption now will carry forward. Benefit recalculations, appeals, and corrections through Service Canada can take weeks to months. Starting that process now, rather than after a missed payment, is the difference between a manageable situation and a financial crisis. It is worth asking why this is happening now, and I want to be clear that I am offering analysis here, not political commentary. Canada's federal government is managing an aging population and a pension system under genuine fiscal strain. The number of Canadians reaching retirement age has been accelerating for a decade. The cost of OAS and GIS payments alone represents one of the largest and fastest growing line items in the federal budget. At the same time, the CRA has faced public and parliamentary scrutiny over benefit overpayment situations where individuals received more in government benefits than they were entitled to, sometimes due to administrative errors and sometimes due to deliberate misrepresentation. In response to that scrutiny, the CRA and Service Canada have been moving toward tighter compliance frameworks. Automated data matching, stricter verification timelines, and faster administrative action on flagged accounts are all part of that broader shift. This is not inherently unreasonable as a policy objective. A benefit system that pays accurately and equitably is a benefit system that remains sustainable. But the concern raised by pension advocates and social policy analysts is that the tightening of these systems disproportionately affects the most vulnerable recipient seniors who lack the administrative capacity, the digital access, or the professional support to navigate an increasingly complex compliance environment. There is also a timing element worth noting. Tax season in Canada opens in February. The CRA's systems are actively updating and cross-referencing data at exactly this time of year. February and March are, historically, the period when benefit holds and adjustments are most likely to appear. The February 25th payment date sits squarely in that window. Pension advocates and seniors' rights organizations across Canada have raised concerns about the communication gap between what the CRA expects and what seniors actually know. Groups that work directly with low-income seniors, including organizations operating community tax clinics and seniors support programs in provinces like Ontario, British Columbia, and Quebec, have noted a pattern of seniors arriving for help after their benefits have already been disrupted, rather than before. The challenge, as financial and retirement planning professionals have pointed out, is that the CRA's written communications notices, letters, and online account alerts are often not written in language that seniors find clear or accessible. A letter informing a senior that their benefit is under review pending information requirements does not always communicate the urgency or the specific action required. Economists who study retirement income security in Canada have also flagged the broader systemic concern. As Canada's benefit system becomes more digitally administered, seniors who are not digitally connected, who do not have CRA My Account access, who receive paper mail on a delay, or who rely on seasonal assistance for their tax filing are structurally disadvantaged. The call from advocacy and professional communities has been consistent. The CRA and Service Canada need clearer, more proactive communication, particularly around February and March, when benefit adjustments are most likely to occur. That call has produced some response. The government has expanded the Community Volunteer Income Tax Program and promoted free tax clinic access, but many in the field argue that these resources remain underutilized and underfunded relative to the scale of the need. Let me now give you the practical steps. These are the actions that matter right now, before February 25th, and in the weeks that follow. Step 1. Confirm your tax filing is current. If you have not filed your 2023 tax return, or if you have any reason to believe your most recent return may have an issue, this is your first priority. The CRA uses your most recently assessed return as the basis for benefit calculations. A missing or incomplete return is the single most common reason for benefit disruption. If you need help filing, the Community Volunteer Income Tax Program offers free tax preparation support for eligible Canadians, including most seniors. Visit the CRA website or call 1-800-959-8281 to find a clinic near you. Step 2. Log in to your CRA My Account. If you have a CRA My Account, and if you do not, I would strongly encourage you to set one up with assistance from a trusted family member or a community organization. Log in and check your benefit status. Look for any notices, alerts, or correspondence flagged in your account. Do not wait for a paper letter. By the time paper correspondence arrives, the payment date may have already passed. Step 3. If your income dropped significantly in 2024, apply for the current year income option. If you retired in 2024, or if your income for 2024 is substantially lower than your 2023 income for any reason, you may be entitled to more GIS than you are currently receiving. But you need to apply for this adjustment proactively. It does not happen automatically. Contact Service Canada at 1-800-277-9914 to discuss your options. Step 4. Check your direct deposit information. This is simple but often overlooked. Ensure that the banking information Service Canada has on file is current and accurate. A change in bank account that was not updated with Service Canada is a common and entirely preventable cause of missed payments. Step 5. If you receive a notice from the CRA or Service Canada, act on it immediately. Do not set it aside. Do not wait to see if the payment arrives anyway. If you receive any correspondence indicating that your benefit is under review, that information is required, or that an adjustment has been made, respond as quickly as possible. The longer a hold remains unresolved, the longer the payment disruption continues. Step 6. Seek help if you need it. If you are confused, overwhelmed, or unsure where to start, reach out. A community legal clinic, a seniors advocacy organization, a trusted financial advisor, or even a knowledgeable family member can help you navigate this. You do not need to figure this out alone. Looking ahead, there are several developments that Canadians in or near retirement should be watching closely. The CRA's compliance framework is not retreating. If anything, based on the administrative direction we have seen over the past 18 months, the expectation is that enforcement will continue to tighten, particularly around income verification, benefit eligibility documentation, and cross-referencing of reported income with third-party data sources. This means that the habits and practices that may have been sufficient in previous years, filing taxes occasionally, not monitoring CRA correspondence closely, assuming benefits will continue without active management, are no longer adequate. The seniors who will navigate this system most successfully in the coming years are those who treat their pension and benefit management with the same attention they would give any important financial matter. That means filing on time, every year. It means keeping contact and banking information current. It means checking CRA My Account regularly, and it means knowing what benefits you are entitled to and actively monitoring whether you are receiving them. There is also the question of future policy changes. Federal budgets in the coming years will continue to be shaped by the fiscal realities of an aging population. Changes to OAS eligibility age, GIS thresholds, CPP contribution rates, and benefit indexation are all areas where policy could shift. Staying informed is not optional, it is a financial responsibility. The Canadian pension system was built to provide security, and for millions of Canadians, it does exactly that. But that security is not unconditional. It requires engagement, it requires awareness, and it requires staying informed about the rules, the timelines, and the changes that shape what you receive. What I have described today is not a reason to panic. It is a reason to pay attention. If your February 25th payment arrives without issue, that is the outcome we want for every Canadian. But if you have any reason to believe there may be a gap in your filing history, a change in your income, or an unresolved notice from the CRA, do not wait. Act now. The cost of inaction is measured not in inconvenience but in dollars. Dollars that some Canadian seniors cannot afford to lose, even temporarily. My name is Joseph, and my commitment on this channel is to give you the clear, credible, and actionable information that affects your retirement, your benefits, and your financial security without the noise, without the hype, and without the headlines that obscure more than they reveal. If this video was useful to you, please share it with someone who needs to hear it. A parent, a grandparent, a neighbor, a friend who is retired or approaching retirement. This is exactly the kind of information that travels too slowly through official channels and too rarely reaches the people who need it most. Subscribe to this channel if you have not already done so. We publish regular, in-depth analysis of Canadian pension policy, CRA updates, and retirement income issues because this is a conversation that does not end with one video. And if you have questions about your own situation, about what you have heard today, about something that does not add up, leave them in the comments. I read them, and your questions often become the next video. Thank you for watching. Stay informed, and take care of yourselves.